Steve Forbes. You're watching Traders Nation.
Welcome back. You are tuning to Traders Nation. My pleasure to have with us here today Kara Murphy. She's Chief Investment Officer and Senior Vice President with SunAmerica Asset Management, an AIG asset, certainly. Hey, Kara, welcome to Traders Nation. How are you today?
I'm great. Thanks for having me.
Thanks for being with us. You know, Wall Street seems to be a male-dominant area of an industry, right? And many people assume that men are better investors, but you know what? I'm thinking that's a myth. What are your thoughts on that?
So I have noticed that on Wall Street it tends to be quite dominated by men.
Yeah.
And what's very interesting is that when we look at the data actually suggests that women are better investors. And I know this is shocking to a lot of people, but starting in the late 90s, we had the ability to really research how different genders invested. And there was some pioneering work done by academics at that point. But since then, we've had a lot of studies that have continued to be able to replicate that, where, you know, single women, married women, U.S., overseas, they consistently outperform men in their own portfolios.
Sure. You know, not only academic, but Fidelity did a report back in 2014. I think it was. They went deep into their data, and they took the differences between the two, and they actually found a couple things. One was women actually saved more than men, okay, 0.4%, and then they also, their performance in their portfolios was better than men too, 0.4%. Now some may think, well, that's not a lot, 0.4%, but over a lifetime, let's say if one were to start investing and saving for retirement in their 20s over a lifetime, that equal to $250,000 plus in a difference.
Yeah.
That's a big difference, isn't it, Kara?
Absolutely. Yeah, when we think we have to save over decades, and if you're able to sort of beat that benchmark consistently over year,
yeah,
that's going to add up to be a lot.
Yeah.
And what's most interesting is that it's not because women are smarter. I would love it if that were the case, then I would have a real leg up. But that's not the case. And women still make the same types of mistakes that men do. Mm-hmm. They just do it less often. So it's really more about temperament than anything.
Yeah. So let's look at the qualities of that, because certainly less mistakes. Could it be like patience? What is this? Is it more due diligence? What would be the factors that come into play for that?
So it really comes down to three main things,
Yeah.
and you touched on a couple of them.
Okay.
One is less overconfident. So everybody tends to be more confident than they should.
Sure.
It also means women also tend to be more patient, mm-hmm. and the women also tend to be less emotional. And I know that's particularly shocking to a lot of people, but at least when it comes to investing, women tend to be less emotionally minded than men do.
Sure. And on the emotion side, let's touch on that real quickly, because I think you're right. I think when women look at data and look at fundamentals, I think they look at it with much more focus, and less all over the place than maybe men. Your thoughts there?
Yeah, I think there's something to that, and it really comes down to testosterone. So
Mm-hmm.
that's the hormone that drives our risk-taking activity.
Sure.
And we actually have, a lot of really good data in this as well.
Yeah.
And so it tends to be that when male traders put on a trade and it works well, then their testosterone goes up, so they're more likely to take more risk. And so men have a tendency to keep putting on more and more risk mm-hmm. to the point where they're betting the farm, and then the trade goes bad. So they'll they tend to outperform in upswings,
sure.
but then vastly underperform when the market turns down. So women, because they have less testosterone, have those same swings, but not nearly to the same degree that men do.
It almost seems like a sport for men, doesn't it? So,
oh,
right?
Absolutely. And it's fun, right? It's great to be competitive. Those
Sure.
are great qualities about it.
Sure, because let's face it, it's like a sport. So men are looking for great plays, and they're always looking for that one play where they're going to knock it out of the ballpark, right? And I think this is where you're talking about. So I'm going to look at something that I can knock out of the ballpark every single time, and it's not going to happen every single time. The odds are against me that that's the case, because we're not all great stock pickers. Certainly we can pick some good ones in a great market, right? But not so good in a so-so market. So maybe testosterone is totally there. And I think maybe like bragging rights too. So I hit it out of the ballpark
Sure.
like a million times, and there's these bragging rights. And women, they don't worry about that. Women's bragging rights are, listen, in the end, I'm going to win this race because I have these three key things. I'm more patient. I'm less overconfident and less emotional. And that's where the bragging rights comes in for women. Your thoughts?
Yeah, and absolutely. And, you touched on another really important issue, too, which is more patience. So when we look at real investors' portfolios, they consistently underperform benchmarks, even after adjusted for fees and whatever else. Yeah. And the biggest reason for that is because people trade too much. And, some of it is because of those bragging rights, like, hey, I made 50%, I'm selling out of that position, when maybe they should really just be holding it. Right. And so men tend to trade much more than women. And if you can identify one single activity that people do to hurt their portfolios, it's trading too much.
Trading too much. So long-term focus is key.
Yeah.
And don't worry about timing of the market, right?
Absolutely. People lose so much by simply just not being in the market.
Right. And I think people also lose when they try to find the bottom and they try to find the top. I think that's crazy. Because you're never going to do that. Once in a while, I catch the absolute bottom, and every once in a while, I catch the absolute top. But it's not like that every single time.
Right, and you can miss some wonderful buying opportunities just because you didn't get exactly the bottom on that stock.
Right. Okay. All right, so let's move on to long-term investing. Certainly, that is key to a greater portfolio. The data says that. Average cost averaging, right? Your thoughts there in regards to long-term investing, let's say for both men and women, what should we be looking at and pairing up?
So I'm a big fan of dollar cost averaging. Yeah. I think a lot of the key to success in the market is to make a lot of things automatic. So make it easy to get money into the market. And by having a certain amount that you put in every paycheck or every month, it just takes the emotion out of it. It takes the thinking out of it and makes it easy. So you're investing X amount every month into the market. Yeah. That's why 401k plans are so successful. Yeah. 401k plans outperform people's individual portfolios. And I think that's a key reason why. And be really consistent. Your allocations to like stocks versus bonds, large cap versus small cap, those should really only change if you had a big change in your either expectations or what's going on in your life. They really shouldn't change very often. You can be rebalancing your portfolio and tilting one way or the other, but you don't want to make big allocation changes often.
Sure, and then like bonuses and stuff like that, that's found money, right? So if you're going to make systematic contributions to your 401k or even to your personal Roth or IRA, then that found money that should go in there because listen, we pay our bills based upon the income that we have, and extra money, let's put it away, right?
Absolutely, and bonuses are great because they're usually paid at the beginning of the calendar year.
Yeah.
So if you can true up your 401k pretty early in the year, you have all the rest of the year to be able to earn that in the market.
That's right, and if you didn't spend a lot on Christmas, you don't got the huge debt, then you don't have to worry. Then you don't have to worry about. All right, so we got a viewer out of New York, Mike Ari, tweeted, wanted to ask a question. We got probably about a minute left here. Since Miss Murphy is with AIG, Bitcoin has made a huge emergence. Will we see cryptocurrency insurance or anything like related to that? Are you able to answer that question or not?
I'm not on the insurance side, but I will tell you AIG has done a lot using blockchain technology. And so I think the great success of a lot of these cryptos is exposing the incredible use of blockchain. And so AIG has really been at the forefront about using this in its products, be able to make it more secure, more complex, and really be at the forefront of some of these new technologies.
Yeah, all right. And do you see the blockchain emerging greater and greater with these? Oh, we're out of time. Boy, I wish we had so much more time to talk about this. Kara Murphy, where can we find, where's your information at? Where can we find you, and certainly information you can provide for the public?
So you can find me on LinkedIn. I like to post, K Murphy AIG, or on Twitter at KMurphsLaw.
Head on over those social media sites. They're absolutely fantastic. I saw my stuff. Kara Murphy, thanks for being with us today. Appreciate it. Have a great day.
Thank you. Take care.
We'll be back. Stay tuned.